Well, welcome to Dornbush download number 57. How are you today, Michael?
I'm good, thank you, Dan.
It's been a wild and woolly couple of weeks, hasn't it?
It has. Again, markets all over the place, levels of volatility, really at the extreme ends, the VIX
They really
indexes.
are, aren't they? Yep.
Yeah, and again, just a surefire sign that no one's really quite sure.
Which way it's going?
Yeah, how things are developing.
What were we down yesterday, 180?
I think it was there, even in the 190s there by the time that sort of closing price auction had finished. So, that big sell-off in Glencore over on the London Stock Exchange.
The share price has come off some 77%. Amazing.
Yeah, that's right. They dropped, and 30% of that came in one night on Monday night. And of course, that saw big sells off in BHP, Rio.
Yep.
Energy stocks have been pummeled, and we'll talk a bit
Absolutely.
about energy in a moment as well.
Yeah.
But resources sector was really under the pump yesterday, but the market generally.
Fundamentally, though, Michael, BHP and Rio are different to Glencore, aren't they?
Oh, yeah.
Not the same level of debt. They haven't had to go out and capital raise. Yeah. And on the likes of BHP, they've still got that, $60 billion worth of franking, or $30 billion worth of franking credits sitting there waiting to give back to investors at some stage. So
yeah, that's right. I mean, I think Glencore, they had that merger with Xstrata there a couple of years ago, and of course, I think it was the biggest, certainly the biggest sort of takeover / merger in the resources sector ever. So
incredible.
Big numbers were involved there, and of course, the environment in that resources sector has really, continued to deteriorate through that period. So Glencore has certainly been under some pressure, and our miners going out in sympathy, no doubt, yesterday.
A little bit green today, though, I see. So.
Bit of a bounce back today, which has been good. But
BHP at $20 would be a good buy, though, wouldn't it?
It is, if they can maintain the dividend. They're paying a 7% plus fully franked dividend at the moment, and the board has suggested they'll continue what they call a progressive dividend policy, which sort of insinuates that they'll try and keep the dividend at least stable. Not for the faint-hearted, again, of course, at the moment, but if that dividend is maintainable, a 7% fully franked looks very appealing.
Yep. And at $20, that would just be ideal, wouldn't it?
Very much so, and as you say, a big store of franking credits still to come out. Yeah. Special dividends, off-market buybacks, all of those things.
And we've seen those before from BHP, haven't we?
Yeah, that's right. So, certainly, potentially some benefit for shareholders there. But, of course, the BHP share price could have a 19 or an 18 in front of it, if we keep going this way. So.
Just on dividends, the banks, they're looking attractive, aren't they?
Certainly are, Dan. Coming into banking reporting season again, Bank of Queensland first off the rank on the 8th of October, I think it is. So they report their results to the end of August.
Bank of Queensland.
Yeah, they've got a slightly different reporting season. They report to the end of August, whereas NAB, ANZ, Westpac to the end of September. Yeah, so we'll be getting some figures out from Bank of Queensland on the 8th. Looking, it should be reasonably okay figures. Again, banks have come under enormous pressure. I think the financials index is down about 22% since its highs around April, May. And, even in the last couple of months, a bit like the rest of the market, down about 15% or so. So, certainly some of that value's come back into bank stocks, and, the yields, the defensive nature of banks, certainly do look pretty appealing at these levels.
And I also think the rules, the Basel rules, make them more attractive as well, don't they? They make them safer. They get that level of liquidity up, and plus the Reserve Bank have another level of liquidity in there as well. So, and I think that's the beauty about our banks. The government says jump, and they've just got to do it. Unlike in the States and Europe, where they're still arguing with the government about their liquidity, aren't they? So
that's right. We've seen, of course, the banks do a round of capital raisings already. All the big banks now, basically. I think Westpac was the only one that didn't do an equity raising as such, but CBA, ANZ, NAB have all got that out of the system for the time being. So it will be interesting to see if the Bank of Queensland's and the Bendigos come out, with their hand out, I guess, so to speak. But we'll wait and see. But certainly it's been good to see some of those, off the book, so to speak.
It's done, isn't it? And they've done it at the right time.
Yeah, absolutely.
Unlike your other favourite company.
Yes, Origin.
Unbelievable.
Yeah, so Origin and Santos, of course, both been under enormous pressure in the last, the last 12 months, really.
Santos is under $4 as we speak. So.
Yes, and certainly on the back of Origin's news this morning that they're going to raise some capital. So for existing Origin shareholders, for every 7 shares you hold, you've got the opportunity to buy an additional 4 shares, and that will be at $4 per share.
And they closed at 6.10, was it? Yeah.
But in trading hold as we speak at 6.10. Of course, 12 months ago, Origin were $12-13 a share. So yeah, they've got their hand out at $4 a share, looking to raise $2.5 billion. Also some asset sales on the cards as well, 800 odd million in asset sales as well, looking at bringing back their debt book back to about $9 billion.
Only $9 billion.
Yeah, so big moves at Origin, and that of course flowed through to Santos, which is also back under the pump again this morning. But
the trouble with that Origin one, with that level of dilution, you've just about got to take them up, don't you?
It is. You're almost compelled to participate, or else you just cop such a big discount.
Yeah.
Crunching some quick numbers. The theoretical ex-rights price, is about $5.20, I think. When Origin comes back out of trading hold, so they're going to cop a good old.
That'll be first port of call then.
Yeah, they're going to cop a good old touch up when they come out. So you're exactly right. You're almost compelled to jump in and grab a few more at the $4 mark. But again, if they can clear the decks, and hopefully the market will feel a bit more confident, they'll keep their investment grade levels up as well. But it's going to be a long road back for both Origin and Santos.
Yes.
Santos, of course, too, reports in the Financial Review that they're looking at also selling off assets, and they're hoping to get some more details finalised by the end of October. So
it's funny, isn't it? I see they've put the LNG plants up for sale. It seems a bit crazy, doesn't it? That's, in my mind, seems to be the cash cow, yet they want to be selling them off.
Yeah, absolutely. And they've got basically ships in the water in the next week or so. So, it's all up and running by all accounts. The money's been spent. Santos is still sitting on $2 billion of cash in the bank, albeit they've got about $8 billion of debt.
Still less than $9 billion.
Yeah, absolutely. But they're cashed up. The big spends seem to be out of the way, but the market just absolutely pasting them at the moment.
We really, for those companies, need the oil price to turn around and start to come back up, don't we? So.
Yeah, absolutely right. Oil price then will reflect on a higher gas price, and but of course. A lot of that's of course dependent upon just the global growth levels, and of course economies are still struggling a bit out there with growth levels retracting. The production of oil is still very high, so until we see the big producers start to cull back out or cull down their production, oil price is going to stay low for the immediate future. So
that's what the Saudis want, so it seems.
Yeah.
But anyway, all that doom and gloom.
Yeah, pretty downbeat today, aren't we? But certainly keep an eye out for bank stocks and reporting season. Some pretty good yields out there.
Yeah, exactly right.
And those PEs have come back to a much more palatable level too, I suppose.
ANZ's at about 10.4 times. On a yield of 6.6, it's looking pretty cheap.
Yeah, absolutely. Valuation metrics looking a lot better for sure.
Very good. Thanks, Michael.
Yeah, thanks, Dan.